This couldn't happen again. This is that one. This couldn't happen again. This is that one. This couldn't happen again.
You wear your heart on your sleeve these days.
Welcome. We are back, getting ready for another week in the market. D, Maxime, Josh, and chat, what's up? Crazy stuff going on over the weekend with Russia and Ukraine. Stock futures are sliding. You know, you could debate that it's from that or whatever else you want to say it's from, but it looks like, you know, we had a move up yesterday. There were some summit talks, potentially between Biden and Putin, and then today Putin went and did a speech, and that did not go too well in terms of the market's reaction or just in general. And right now it does look like, from what I just saw, you are seeing an invasion. Russia's invading eastern Ukraine. I'm not sure exactly what that looks like, but I believe there are some videos of the military entering, and it's crazy. So we'll see what happens. Make sure to keep up with the news that can obviously affect everything going on. Make sure to hit the like button. We got 18 people in here. Keep dropping likes on the way in. And let's get started with crypto. After that, we'll talk about the market and individual names. This week we have earnings for CLOV, Coin, quite a few mid caps, and we'll see how those look going into earnings. So yeah, starting off with Bitcoin. At one point the swing was up about 14%. Now it's down about 7%. So pretty rough swing down during this swing, and it's not really at any important levels right now. You know, if you really zoom out, if it comes back down towards this 33K area, which it definitely could, you still could argue maybe a double bottom, you know, type 1, type 2 reaction at the harmonic PCC, and then hopefully reversal there, but we'll see what happens. Really, at this point for the swings, just you want to see Bitcoin reverse above 33K, 32K, otherwise you're probably going to head down to test the bottom of this little range it's created around 28.7K. That's really it. Very, very rough couple of days here. Let's see if we can chart anything on lower time frames. That potential inverse head and shoulders never confirmed, and now it's invalidated. So I'd chart maybe something like this wedge. See if that plays out, and if you really zoom in, maybe a little bit of classic bullish divergence could develop at some point, but I'm not going to chart it for right now. And then maybe 4-hour support around 36.3k. We'll see if that holds from this low over here and kind of these lows and these highs. So that's why I chart the 4-hour for Bitcoin. Moving on to the other crypto swing, Litecoin. It's back in the support zone. You just want to see reverse above the support zone. Same thing, very similar to Bitcoin. You know, they're falling into their support areas. Hopefully they can reverse here. On lower time frames, you might have a little bit of a harmonic here. I don't know if it's going to be textbook or not, but pretty close to pretty much a bullish bat on lower time frames. So we'll see if that plays out or not. You're pretty much at the PCZ. You could get triple classic bullish divergence if the MACD starts losing negative momentum and starts going back towards green. So this could actually work out pretty well. You're in a historical support area. You have a 4-hour bullish bat, potential divergence. This could be a low risk, potential high reward area for Litecoin, but if Bitcoin breaks 33, 32k, this is probably going to break under 95 eventually and maybe go down to like 84 after that. So that's why the stop is in place. We'll see what happens. Ethereum, the hidden bearish divergence I warned about and the resistance I was talking about at these areas is now playing out. You might maybe flip this previous demand line into a supply line if you start bouncing off of it, but you'll have to see. And if it can't, then I'd say 2150 is the next support. If it doesn't use this previous supply line as demand line, you'd probably look for 2150 to hold next, or hope for 2150 to hold next. And yeah, that's really it for crypto. I mean, you just got to keep watching the news. Apparently, I think the White House or Biden or somebody speaking on regulation in general for crypto this week. I think that's what we were talking about last week. So I believe that is this week. So look into that. That could affect things even more. So keep an eye on that. Before we even get into stocks, we have crude oil futures going higher and higher, up about 3% on the new day, which started about 4 hours ago on TradingView. And yeah, broke over this key level of 76 back towards the beginning of the year. And let's see where the next resistance is for crude oil futures. Like 107 maybe. I mean, you could chart a few little minor resistances. 97, 92 is another one. We can kind of zoom in and see where these are from. So I'm charting 97, 92 from these highs over here, and this low over here, and then 107 from this high, this resistance, almost this one. So those are probably the next two levels I'd watch for crude oil futures. But that's heavily outperforming currently with everything going on. Moving into stock futures, you're down quite a bit, and it's not looking good. So your NASDAQ, you're seeing your lowest prices since last summer on NASDAQ futures. Currently, I don't think you've done that on the actual NASDAQ composite yet. No, you have not. You haven't even broken your January lows. But NASDAQ futures are down 2%. So if we open 2% lower tomorrow morning, that'll get you pretty close to retesting your January lows in the beginning of this week. And that probably is going to be the same case. The S&P is down 1.5%. And futures don't match up perfectly, but we can take a look. Oh, sorry, 1.5. Yeah, you're pretty much retesting your supports towards the beginning of the week. The major support areas, right? This potential head and shoulders neckline for the S&P 500. You're going to be testing that tomorrow morning if futures stay the way they are. And then for the NASDAQ, probably going to be retesting January lows, which also lines up with this. So I might draw a little bit of a support range here. Let's see. So you're going to be testing make or break areas to start the week, and obviously with all the news going on, that could affect things either way. It could help us bounce off of these areas. It could help bears get a close under these areas. We'll see what happens. But you definitely want to pay close attention to that. And remember, we did talk about that hidden bearish divergence on almost all of the indices and so many different cryptos and individual stocks. I mean, so many different assets right now have hidden bearish divergence, implying that a lot of equities are going to continue their midterm downtrend that they've been seeing pretty much this whole entire year. So we'll see if that continues to play out. But yeah, on higher time frames, I still don't see anything that looks super bullish to me, other than you're getting closer to supports, which isn't really an indicator. Support or resistance is not necessarily, you could look at them as indicators, but they're more of just levels in my eyes. I think indicators are things that give you probability. I don't really think support and resistances give you necessarily probability. Obviously, based on how you react to them, that's where you get your probability from. So Still gotta wait for variables. That might be even better word to use, for variables to appear. We don't have bullish variables. I don't really see bullish patterns or divergence or harmonics. I might have missed some, but they're not really standing out to me just yet. So larger time frames, not looking great. QQQ kind of looks the same, but a gap down tomorrow morning could take it under this inflection zone. And the ARK ETF, $61 is the next level to watch. It could easily test that tomorrow. It was down 5% on Friday. And I mean, if the Nasdaq's down 2% with futures overnight, the ARK could be down 5% tomorrow if that holds into the morning. So you could see a test of your peak before the COVID crash and the back test in June of 2020. You could see a retest of $61. That's the next big level for the ARK ETF. And it's honestly the first big level that the ARK has seen in a while, because after it broke that $81 level we were talking about, held it for like one day, it back tested as resistance like 3 times, and then it just dumped even further. You really haven't had anything, because if we look left, there's really all you did between 61 and 81 is go straight up, and then you went straight back down. It's just historical price action replicating itself. It's very, very common. And now you're entering an area where you could see historical support. And then if that doesn't hold, then probably look at $58. There's a gap fill there, and then I think we have talked about the larger potential bullish bat in play. I should probably just keep this on my weekly chart so we can look back at it. And let me skip that song. So that PCZ would be around $48. So 61, 58, 48. Those are like the next levels I'd be watching for the ARK ETF. Still have that hidden bearish divergence. The bear flag I warned you all about last week is currently playing out. And moving on to the Russell 2000, same thing. I told you all about this bear flag. The potential hidden bearish divergence might confirm in the beginning of the week if you continue to sell off. And honestly, if you do start really pulling on the Russell, you're probably going to retest your lows from January. I mean, there's really nothing in between where we are right now and your lows from January that I could see could act as a big support. Other than, you know, news could reverse the price at any time, of course. But yeah, that's how the market's looking on higher time frames. On slightly lower time frames, you are getting some harmonic structures, but I don't really think there's much of any point in charting them for right now until the market opens tomorrow because of futures being down so much. So maybe we'll chart those like tomorrow night. We actually have some pretty interesting variables on the 1 hour chart on Friday. But again, there's not much of any point in talking about these until we see how the market closes the day tomorrow. Just futures are so volatile, so I don't know. We'll see what happens. You're clearly oversold on lower time frames, but you're not oversold on larger time frames. If the bears want to take it lower, the oscillators are giving them the green light to take it lower if they want to and if they have the power to. So yeah, we'll see what happens this week, but I think the clearest and easiest way to look at the market in general is you do not want the S&P to break down from the head and shoulders. You don't want to see the S&P 500 under 4,200, which is about 3% lower than your current price. So you don't want to see a breakdown. When you break that, you're confirming a lower low. If you do confirm it, you could be confirming a lower low. A head and shoulders breakdown, that would be such a classic long-term trend reversal. And by long-term, I just mean maybe, you know, this leg of the trend. But obviously, if we zoom out even more, this kind of looks like nothing compared to what you've done in the last decade or two. So short term, it's not looking great until it does. Things could change very, very quickly. Good news could come out. It could get worse. We'll see what happens. With all the volatility, a lot of people might look at this week as like a great week for day trading. But when you have volatility with news, it can make it a lot tougher because you could, I mean, what we were seeing last week was crazy. The amount of back and forth between what the US was saying and Russia was saying, it was just moving the market back and forth. If you get that again this week, it can make day trading pretty stressful because you can't anticipate what, you know, all these politicians are going to be doing. Maybe you could. I mean, that's just not my field of expertise, but I think really a week like this could actually be really good to just pick like a few trades that look really, really, really solid and just stick with them. I wouldn't try and overtrade this week. I mean, you're gonna have a lot of volatility most likely, but it could be a little bit of a mess trying to only use technicals in a week like this. So, you know, I'd probably just wait for very clear signals on the 1 hour, maybe even 4 hour time frames and just play my trades based off of that. Like for example, support retest. maybe we get some 4-hour classic bullish divergence down at the retest of your January lows. And then also you can get those XABCD formations on the indices in a lot of different stocks, something like this. Just charting it loosely. So I wait for opportunities like that going into the week. All right. Apart from that, let me skip that song. I'll put down the volume a little bit. I warned about this high or low formation occurring on the VIX. It's still occurring, and you might open up towards over here. Futures stay the same tomorrow. So we'll see. Historically, the VIX, and really ever since the COVID crash, has not, well, ever since the recovery after the COVID crash, has not been able to really sustain price action over 30. 30 has actually been a pretty good level for reversals for the upside in equities when the VIX hits 30, but we'll see. You know, this time it could be different. You never know, but just see how many different peaks. Like, you don't really spend more than 2 or 3 days above 30 looking at all of these peaks, you know, maybe like max like a week. So we'll see if we can retest those areas, and yeah, just look out for the resistance levels. The 10-year actually coming back down. That's very interesting. This is actually back under the very important resistance, and you actually want to see that if you're in tech or growth stocks long term. Pretty interesting. I actually didn't expect it to break down like this, so I don't know, maybe it gets back up. We'll see. But for now, you're actually pretty comfortable if this stays under 1.9 in my opinion. Maybe a little bit of a pullback with some classic bearish divergence on the daily. But again, I mean, you know, I'm not necessarily a fixed income trader, but was I not talking about how bullish the US 10-year looked in these areas like nonstop? And then also last week, go back to the streams on Monday night, I said it looks like you could get a pullback on the US 10-year. I think that's the first time I've said that in like months, that it could pull back, because you had that rejection of the resistance, the double top, and the triple classic bearish divergence. And I don't know, maybe I gotta start trading bonds instead of stocks. I don't know, we'll see. But that's the US 10-year. And apart from that, gold, that's going to be something a lot of people are going to be focused on this week, most likely. Hate to pat myself on the back again, but let's go over here. Go back to my streams in November and December. Every single night I was saying gold looked bullish, every single night. And now, you know, it was moving slowly, and it didn't really seem like anybody cared, and now everybody's talking about gold. This is the same, you know, thing I bring up all the time. Nobody cares until the move happens. I was telling everybody to care over here, nobody did. And now you see everybody talking about gold, but you could have accumulated with the composite operator months ago and much better prices, and now gold's finally running. Surprise. We even talked about the weekly breakout, the exact week that it happened. So crazy. I don't even, is this real volume? That's actually crazy. I don't know if that's real. That's showing the highest volume since like 2013. That would be very impressive if it's real. So yeah, and I don't really know how volume works on gold either. So yeah. Running like crazy. We'll see what happens. The dollar still just going sideways, not too much of any change there. The Hang Seng Index is selling off. It's down 2% currently in its session. Let's see. I don't think the London Stock Exchange is open. What's the best index to use for that? Probably not. I want to find futures for Europe. Let me know in the chat if you know any good European futures, or even market. I don't think the markets are open. They're not open right now, so I'm looking for futures. To see how those are doing with everything in Europe. FTSE. I think this is it. FTSE 100 Index Futures. Cheddar says, headed out, just wanted to pop and say, hey, what's up, Cheddar? I didn't see you in the chat. Sorry, I've been just so focused on TradingView. Hope you're doing well. I think I saw Neutron earlier though. Yeah, Neutron's in here as well. Hope you're doing well. I haven't seen both of you in chat in a couple weeks. So let's take a look at that. RTS is the Russian market ticker. Thank you. Take a look at that. We'll look at the spot. All right, so we'll take a look at a few of these now. I probably should keep them on my watch list. So this is not moving. I'm not going to be able to chart that or that. All right, so maybe we just look at the Russian futures. I'm looking for something that's open. There we go. All right, so this is the Russian index futures, I believe. Thank you, Frank. Crazy dump. wow. So let's just look at the actual index first. So this is how the day went. It closed. I don't know when it closed. Let's take a look. 10 a.m. today is when it closed. I don't know, but 13% decline in one day. I think I saw something say this was like one of the worst days since like 2008. I don't know if it had any worse days than the COVID crash, but yeah, not looking that good here. It is actually very close to a level. Actually, kind of. We'll see if it can hold it or not. 1204, you could see it was resistance in 2018 over here, support over here, support over here, resistance over here in 2017. Oh wow, support, oh my gosh, 2012, this is such a coincidence, I can't believe it. It was also resistance over here in 2009, almost support in 2006. So this is probably the big level that you want to look at on the RTS index, 1204. And it did close above it just slightly. Kind of looks like, fell under for a bit and then they rallied up to close it just above. And then these are the futures, but they've been open for a while, so pretty much the same thing. So I'll keep that on keep them next to the Hang Seng Index. So yeah. All right, so that's the overall market. It looks very volatile looking, potentially going into the week. And that could create opportunity. But again, you're going to probably see a lot of people acting like this is going to be an amazing week for day trading. I just don't think it's going to be a great week to go, up, down all the time. Hey, if you can do it, congrats. It's just the news might be a little bit frustrating. So for me, I'm just looking for 2 or 3 home run trades this week. Maybe 2-day trades, 3-day trades, maybe day trades, who knows. But I really think this is the type of week where you could get a very, very large move in either direction. I don't know the direction right now. And of course, there'll be choppiness within, but that's probably how I'd go about this week. I do my research, look at what looks good to me, look for the potential moves that also line up with news, and then probably trade around that. Not financial advice. So let me take a look at the chat. Make sure to hit the like button, all right? We need to get at least 20 more likes right now. We should have that, all right? Hit the like button. If you're not subscribed to the channel, hit the subscribe button. If you want to learn how to do this all for yourself, there's a free course in the description. Join the Discord. That link is in the description. It's free to join. There's a lot of stuff that you can get in the Discord. YouTube alerts, 2,000 other people you can talk to in all these chats. Paid bots for free, okay? It's free to join. All this education as well. It's all there waiting for you. All you gotta do is click a button in the description. Neutron says, come on, smash it and join the Discord. Check out the YouTube links. Appreciate it. And thank you for dropping the Discord link, Neutron. So that's the overall market. Let's talk about some individual stocks now. We'll just start off with the swings. The Fisker swing, it hit the first target for a 23% gain, and then it dropped with everything else. So I'm happy. It perfectly hit the target after hours on earnings. Right over here on this wick right here. Not perfectly, but it got a little bit higher than the target, which is even better than perfectly hitting it. So all the orders can fill. Let me take off extended hours. So Fisker swing already hit the target, If it hits a stop now, it already hit the target first, so not much to worry about here. But of course, I hope it goes up before going down. We'll see what happens. I think in general, in Fisker, you just want to hold above this green demand line here, above it for now, but we'll see what happens this week. BABA was down 4% on Friday. This goes without saying. I say this every night almost. 111. That's the stop is under that level. That's the PCZ of the harmonic. That's the very, very important triple bottom and historical level of support. That's what you want to hold on BABA. That's really it for the swing. Lucid, it was close. I don't know. I really feel like this would have already hit the first target if all that stuff with Russia didn't happen at the end of the week. On Thursday, it was going for it. It was breaking out. You're above the 200-day moving average. It was up 5-6% on the day. The swing started off beautifully. It was up like 2 or 3%. And then just a bunch of news came out and everything just really, really hardcore fell on Thursday, like into the close, and it just dragged Lucid down. It was pretty tough. So at this point, you just want to hold 25.75 on Lucid going into the week. And then finally, CLOV. We're just going to talk about it because we always talk about it. It did stop out. Earnings are this week. You're still in the wedge. I kind of redrew it a little bit. Technicals really don't matter on a week that has earnings, to be honest. You're in a, I mean, long term, you're in this very long term falling wedge, and you know this wedge could continue down to like, you know, $1 or whatnot. Hopefully it doesn't. But this also is like, if you really zoom out, like this is the apex. Like we were doing this last week. If you just inverse the chart, like look how bearish this looks, right? You have this crazy, huge falling, rising wedge on the inverse chart, and it just looks like you're about to just crack down and just dump. But in reality, it's the exact opposite. And you know, it doesn't necessarily feel like it could make a crazy move to the upside soon. But when you get a pattern this large, and nobody's talking about it anymore, other than a few people, and it's, you know, just slowly bleeding and bleeding and bleeding, any good catalyst or reaction from earnings, I mean, you could see 100% move on CLOV like it's nothing. Okay, because $4, it was at $4 like this year. It was at $4 this year, and now it's at $2. So it's only a $2 move. I mean, it's like 100% move, but you just bled on low volume. There really wasn't much of a catalyst. It was just falling with everything else. Again, when you have such a massive downtrend with low volume bleeding and no catalysts, it does not take a lot to reverse that. Will it reverse? Who knows? I don't know the future, but I'm just saying if you get the catalysts you need, you could see a very quick and easy reversal. But it depends on the earnings, of course, and I can't tell you the future. So that's really it for the swings. There's not that many swings right now. We've just been focusing on day trades, and we've been crushing it. We've been absolutely crushing it. Let's see if I could pull this up. Where's the last few months? So yeah, I mean, these are fun times to be trading in and out. Long-term trades and swing trades. I mean, I could pull up another link that shows how horribly the market has crashed, but we'll get to that in a second. But yeah, almost 13,000% in potential returns. And again, it's not, you can't really add up and subtract profits and losses on percentages like this. This is just an easy way for me to track the results. These are not the actual percent returns. It's just a sum of percents. 13,000% sum, not literal return, in the past 4 months in premium. And just look at the last like 30 or 40 trades. I mean, let's zoom out for a second here. Just look at this. Just look at this leg of trades. And this is all during one of the, during the worst correction since the COVID crash. So we're seeing the worst crash in 2 years, or the worst pullback for the market in 2 years. And this is how the options are doing. And honestly, most of these were calls. They weren't even puts. So it's just finding areas in which you can find intraday bounces. And if you want to learn how to do this, you can join premium and see it firsthand, or you can just watch the course or join the Discord, whatever you want to do to help yourself. But we're just going to keep doing that, but make sure you find a way to help yourself. That's all I'm going to say. But trying to trade this market without learning anything and just winging it, you're literally asking yourself to lose money if you're just going in every single day without any effort, because there are people that are going to beat you that are putting in more effort than you. So don't expect to win. Don't think you're owed to win if you're not trying and you're not learning more than other people, all right? You don't deserve it if you're not putting in the work. So what's up, Michael? What's up, Neutron? That's really it for the swings. Some other stocks, Facebook, still just dropping and dropping. I actually charted this towards the end of the week. If it heads down to like 190, which there's nothing really historical there. I think 197 is a more historical level. It's also a gap fill. But at 190, you could have a cipher on Facebook, or if it drops even lower to the 886. AMD, I'm watching this, testing the 200-day moving average, but if this gaps down tomorrow morning, then you're going to get hit in bearish divergence, and there's not much support to like $100 then. But 100 is a very interesting level. I don't know if it gets to 100, you even have a gap fill at 105 for AMD this week, but 100, you could see the high over here and the low over here. I'd be very surprised if it didn't at least have like a reaction bounce at $100 if it does test it. But yeah, watching that. Tesla also starting to create this wedge formation in an inflection zone, also going to be testing 200-day moving average this week. What else? X, this one's rejecting the 200-day moving average with potential hidden bearish divergence. This could be a potential pullback ticker to watch this week, but we'll see. Natural resources could be, you know, a little bit volatile with all the things going on and sanctions and whatnot. And then BP. This is another one I'm watching. I don't know. We'll see what happens with this. It's had a very good trend for the last few months, but also pulling back at historical resistance. So I don't know. There's just a few tickers on my watch list. I did send an actual watch list to premium members yesterday. It was really hard. I went through like 200 tickers. I only found like 10 that looked decent to me. So yeah, I mean, you could just look at a couple. Let's see. Verizon. Got this descending broadening wedge. It's at a make or break area. It's actually technically at a resistance, but I'd just be watching Rise and see if it can break out. What else? Oak. This is in a nice long-term, you know, upsloping channel. Just watching this because it's reversing what the market's doing. The market's been selling off so far this year. This one's actually been outperforming. So this is showing relative strength. I like it above $60, which was its height before the COVID crash. I mean, the S&P like went up to the height of the COVID crash and then went a lot more. The S&P did something like this, and that's where you're kind of out in the S&P. So I don't know, we'll see. But I'm looking at these things for like more long-term, not necessarily just for this week. 2, we've got a bullish shark and a wedge here with potential divergence, but again, news can override all of these little technicals and individual names. You got to be focused on what the overall market's looking like with all the headlines and how people are reacting to the headlines. So yeah, but this week we have Macy's, Krispy Kreme, Home Depot, Cracker Barrel, TDOC, Virgin Galactic on Tuesday. Reporting on Tuesday, Lowe's, Fubo, Overstock, Skills, Hertz, CLOV, eBay, Jack in the Box on Wednesday, Thursday, Coinbase, Etsy, Nikola, Moderna, Baba, that's one of the swings, Beyond, Wayfair, Open Door, Rocket, I haven't looked at Rocket in a long time, Six Flags, and Carvana, and then Friday you got Foot Locker, OCGN, Lending Tree. So big week for some mid caps this week and next week. And then, you know, we're gonna have some small cap earnings still, but earnings are finally, we're starting to pretty much get past the bulk of earnings at this point. It's just kind of like they didn't really matter too much, it looks like, because of everything that happened with the Fed and now Russia and Ukraine. So we'll see what happens. 4 more likes, hit 30 likes. Make sure to hit the like button if you didn't already, and subscribe to the channel if you want to. Neutron says, I'm good, just grinding every day, trying to put in the work and study and be smarter than the next guy. Honestly, exactly what you should be doing. Hope you're doing well. Looks like you're doing well. You said you're good. Okay, so yeah, we pretty much covered everything I wanted to talk about. We still have 38 people in here, so if you want me to look at it, take it or drop it in the chat. Nothing I say is financial advice. I'll do a few. But we gotta hit 30 likes first, otherwise I can't look at any other charts. So hit 30 likes, drop some tickers in the chat, and we'll look at a few. Alright, Tattooed Chef. Looks okay to me, technically. Technically, it looks okay to me. You have a descending broadening wedge breakout. You kind of back tested it. Not bad. One thing I would say, however, is what if you look at it like this? Then it's kind of like very close to breaking down from like a bearish pennant. So I think there's different ways to look at this. Overall, you don't have much resistance until 14, and your overall support's like 11. But I'd look at this more long-term than short-term. That's how I'm looking at a lot of stocks that have charts that look like these. FNKO, I'd probably redraw this. You're in a downsloping channel or wedge. I don't know if I can still look at it like a cup and handle. It's been too long for a handle. So I just look at it like this. Big resistance around $19 to $20 historically and do 200-day moving average. Skills, I'd wait for a higher low. I mean, this one's just bleeding and bleeding and bleeding. It does have earnings on the 23rd. You could draw like a wedge here, but personally, I'd like to see it just put in a higher low and show some sort of life, which it hasn't in a while. But it is showing a long-term wedge. It's kind of similar to CLOV, chart-wise. BBIG, be careful. It's like looking like a long-term dragon, but also you got this little, a lot of charts look like this, where you're getting close to like these wedge supply line breakouts, but right before then you're also showing bear flags. And you want to be careful, because a good example of what this could potentially happen, or what could potentially happen here, is the ARK ETF. Take a look at this. Right, if we just delete these lines for a second, you had this falling wedge, you had classic bullish divergence, you're getting very close to a breakout. At the end of that wedge, you also developed a bear flag within it, and then you broke down. So you want to be careful on a lot of these stocks. You know, a lot of people, you know, some newly developed traders, I don't know the best word to use, might only just chart the falling wedge and be like, oh my gosh, it has to run up like crazy now. But you can have smaller patterns within larger ones. And that's what you might be seeing on a lot of these mid caps. So be careful with that. Just see how it reacts to those levels. And then TDOC was down 8%. What, did it have earnings or no? It says earnings are tomorrow. I don't know. But yeah, same thing here. It's just another one of those names that's down like crazy. Like honestly, let me see if I could pull up this. It's right here. All right, most of the names, not all of them, these types of names, okay? You, just by seeing this image, you know what types of names I'm talking about. These types of names, I think among this list, you have some amazing long-term opportunities. But in general, I think it takes a lot of patience, and I'd wait to see some sort of life in a lot of these names. I actually talked about this with Mehdi. The thing is, if now we do see an S&P 500 head and shoulders breakdown, if the NASDAQ breaks down, you know, these could go down, you know, something like DraftKings could go from negative 75% to negative 85%. I mean, it's already down so much either way. The bears are not going to really have to need, the bears are not going to need much more control to do the same thing they've been doing for almost a year now. So the market already did crash, and it's funny because I'm sure a lot of you who were here back in last fall remember me saying that, and I was like the only one saying that the market was crashing, and now everybody else is saying that. But again, I'm not just talking about the large caps in the S&P and the NASDAQ. That's not the whole market. Most people look at that as the market, you know, that's an easy way to look at the market, but like so many different names have already crashed. You know, they've already done what, you know, some stocks that are now only just falling this year might start to do. But I think these types of stocks, not necessarily every single one on this list. I think some of them on these lists might actually stay down here for a while. It's just we're at a point where you can find a lot of opportunity if you know how to pick a good basket of stocks from this large file cabinet of destroyed stocks. I don't know, I'm not trying to use too many analogies, but hopefully you understand what I'm trying to say. But in general, you know, we just looked at TDOC, we looked at another one that looks similar. You know, we're going to call these, I'm just going to call them the crashed stocks, okay? Because there's so many different takers we look at it that look similar to all these charts. On the crashed stocks, I just wait to see some sort of higher lows being developed and some sort of strength against the overall market, which they have not shown since last February when the ARK ETF peaked and when the Russell kind of peaked. It put in a new all-time high in last fall, but it really was a weak high, didn't really do much. So yeah, that's how I look at a lot of these names. But like long term, I mean, you haven't seen small caps at these multiples in 2 decades, which is really, really crazy. And you're seeing that after the S&P just had an insanely historical, beautiful run for the last 2 years after the COVID crash dip. So that's opportunity. When you have so many different names that have already crashed before anything else has crashed, these could be the first ones to start springing back up to life when it's time for the overall market to show life. So if the S&P and NASDAQ keep selling off and are still red every single day, I don't expect most of these stocks to go up against the market. But when the S&P starts going up 0.25%, 0.5% steadily here and there, and we're past a lot of this bad news, these are the types of stocks you might see up 10, 15, 20% like it's nothing, similar to how it looked like in May and June of 2020 after the COVID crash. Like it's literally easy. Like, you know, 10% is nothing. That's like a 1% for what we're seeing nowadays. You know what I'm saying? But you have to wait until the market shows you that type of condition. It's not there for right now. So yeah, TDOC. We'll look at a few more. I mean, I have the same thing to say for most of these stocks. Like I just said the same thing for all these crash stocks. It's very, very similar here. Same thing for Oxygen. Nothing's, I mean, at the same time, I don't want to say the same thing for all of them because I don't know a lot of these companies fundamentally. You have to look into that as well, because also a lot of them were a part of, I'm not saying this for Oxygen necessarily, but a lot of them were a part of a bubble that occurred in growth stocks between May of 2020 and February of 2021. Okay, so I'd like to see us get back above $5 in general. DraftKings, This one, we've looked at this many times, a huge shark on this chart. I saw Mitch Ray actually looking at it last week, and he was talking about how, you know, could maybe double bottom here at the PCC. Maybe it could. But I'll tell you, I like DraftKings at 17 a lot better than $65. So it just depends on your time horizon for a lot of these names. I do think DraftKings will revive itself at some point, but it could take a month, it could take a year. I don't know. MO, this is pretty interesting. It's testing a breakout, kind of like a inverse head and shoulders on the weekly, like that. I'm just drawing it loosely. So above like 52, 53, then your next resistance is like 57. So hopefully it can break out. If it can't, then bottom of the range is 44. REZI, I look at it like this. Just in this long-term channel, but it's not broken out, or wedge. ELU. I don't know. There's just not much, you know. I think that's just going to be it for tonight. It's like you could do all the charting you want on a lot of these names, but it's the overall market that you have to focus on for right now. And right now, things are not great. So technicals long term on a lot of those companies that were in the crash stocks, I think they can show a lot of good potential ideas. If we go back to DraftKings, the shark, right? But you have to have the patience, and the thing is, most people will not have the patience for something like this. So that's how I just look at it. Either it's, you know, either wait, there's not financial advice, but either wait for the higher lows to start developing for there to be some sort of life in these types of names, or off of what you're already seeing, these could be amazing long-term opportunities across, like life-changing opportunities in 3, 4, 5 years. Who knows? But that's how I look at it. We already looked at Facebook earlier, danger. So yeah, that's my thoughts overall, financial advice. And make sure to join the Discord. Link is in the description. Thank you for the 32 likes. Hit the like button if you didn't. Hit the subscribe button. See you tomorrow.